Euro dollar. So the market continues lower, with the price now focused on a test of the 2005 base at 1640. Daily studies are tracking in oversold territory, but a test of this level is likely before we see any form of a significant bounce. Ultimately, only back above the 50-day moving average would compromise the bearish outlook. Sterling dollar. Cable remains under pressure and is focused on a retest of the 2013 low at 148.14. Daily studies are oversold here as well, although the market is expected to test this level before any meaningful bounce. Ultimately, only back above the 156 area would compromise the bearish outlook. Dollar yen. Dollar yen is in the process of consolidating following a recent low that was set on at 115.55 back on the 16th of December. This is sought out to be a higher low ahead of the next major upside extension to be confirmed on a break above the recent 7-year high at 121.85 from the 7th of December and towards 125 further up. Ultimately, only back below 115.55 would compromise the bullish outlook. Euro Swiss. Euro Swiss continues to consolidate just off the key psychological barrier at 120. Inability to take out 120 will suggest that the market is trying to put in a base, but confirmation will need to be given on a close back above 120.45. Aussie dollar. Aussie dollar is in the process of correcting just a little bit following the latest round of setbacks, which stalled out shy of key psychological barriers at 80. However, any rally should continue to be very well capped, with a lower top sought out somewhere around the 82.15 area, but only back above 85.40 would compromise the bearish outlook. Dollar CAD. Dollar CAD has recently traded up to fresh 5-year highs, with the market now focused on a test of the 2007 high at 1877. A break above 1877 would open the door for the next major upside extension over the medium term towards the 3063 2009 high. But with daily studies stretched a little bit, there is risk for a bit of a pullback, but any setback should be very well supported by previous resistance in the 1280 area, with only a break back below 1280 to compromise the bullish outlook. Kiwi dollar. Kiwi remains locked within a consolidation over the past several weeks, although the market is classified as a bearish consolidation, with only a breakback above 80.35 to compromise the bearish outlook. Ultimately, the market is expected to be well capped above 79 in favor of fresh setbacks below the recent lows at 76.10 and towards the 7200 area further down. S&P 500. The S&P 500 has recently pulled back quite a bit from the recent record highs that were set in late 2014, with the market now focused on a potential retest of key support at 1970. A break below 1970 would open the door for an acceleration of declines and confirm topping, while inability to do so will keep the market focused on the top side. But look for the potential lower top, somewhere below the 2065 area, ahead of the next major downside extension below 1970. Again, back above the record high at 2097 would negate and open the door for fresh upside. Gold. Gold is in the process of a multi-day, multi-week consolidation, but is defined between 1256 above and 1131 below. A break above 1256 would suggest that the market is putting in a major base, while back below the recent multi-year low at 1131 would open the door for a move towards 1000. Anything in between is classified as consolidation.